You're watching India Market Close, and what a day it has been. The markets have been moving in a range, but that doesn't mean it's not been an exciting day with a lot of focus on the Bank Nifty. That's really the hero of the day. A very quick look at what's happening on the top line, and yes, the Nifty holding up decently, I would say, above the 22,100 mark after what looked like a tough afternoon. The Sensex also about 186 points up, but Bank Nifty, like I said, is the story of the day. And we'll pull up the constituents of the Bank Nifty also, because it's the big boys. HDFC Bank, Shashidhar Jagdishan's talk seems to have had some effect as far as HDFC Bank is concerned. There you have it, about 2.5 points up, and when an HDFC Bank moves, of course, the index moves. So a lot of concerns have been addressed in terms of communication from the management, etc. All of that playing out. Axis Bank as well, but Kotak Mahindra Bank is the other story over here. What happens when you make the effort to keep talent? And that's really the interesting underlying story playing out as far as Kotak Mahindra Bank is concerned. Of course, the loser of Kotak Mahindra Bank's ability to retain talent has been felt by Fed Bank, because Mr. Manian was headed there probably as CEO. It's something NDTV Profit had reported. That stock down 5.5%. But let's pull up the heat map to give an overall picture of what's happening in the markets today, on what I would say is, if you just look at the Nifty and Sensex, you might think, oh, not a very exciting day. That's not true at all. So much going on today, and Coal India is one of them. 3% down. Second trading day in a row where you're seeing that kind of pain. Yesterday it closed about 5% down. In the closing hours, there's been weakness through the day. Some attempts by the management to come and explain that things aren't as bad as it seemed in our investor call, where they've lowered guidance for e-auction revenues, for output, etc. But the stock not really responding. Power Grid is the other one on the other end of the spectrum after a positive Bernstein report. And we're going to go into all of those details. But yes, banks leading the pack over there. Power Grid, of course, doing really well. Tech not having a very good day, whether it's a TCS, an Infi, and HCL Tech, all down between 1.5%. Quickly pull up the advanced decline ratios and just look at what the lay of the land has been. And look at that. Just look at the volatility over there, where you started perhaps on a positive note. A day full of range-bound trade, and right now, maybe I would say, the bears taking the lead. Will it run through, and what do you pick in a market like that? It turns into stock-specific stories, and Hersh now with more details on that. What a run, especially in the media space.
Yes.
But it's about one or two stocks only, isn't it?
Well, yes, I'll cover media last, Tamanna. I'm going to first start off with what you already spoke about, Federal Bank. Let's quickly take it as one of the top stocks that I've picked, at least with regard to AR. Quickly up. In fact, the stock is down now almost 5.5%, giving up all of those gains that it had made last week post the announcement. CIE Automotive also weaker set of numbers, and on the back of that, you're seeing a knock on the stock. Outside of that, you have the likes of a Whirlpool, which is also trading in the red. Around 1.5%. Ugro Capital, surprisingly, not sure what's happening there, but down 5% in trade today. So something to keep your eye out on. Outside of that, you have NBCC onto the positives. Deepak Fertilizers, both of those are trading higher. NBCC order win. Deepak Fertilizers also on the back of news. Vibor Steel, first day of listing. That one has, really had a blockbuster listing. And 192% over IPO price. Paytm is the other one, 5% higher. Consecutive days of upper circuit for Paytm, definitely a positive. First 2 days of the week in trade, and both of those, it's done very well. I'll come to ZEE now, because Nifty Media is taking the lead overall among sectoral indices. ZEE up 8.5% now. Newsbreak making that difference on the stock price. Sona BLW up 4, BHEL up 2.2 are among the other gainers on the Nifty mid-cap. When I'm looking at some of the smaller names, you have Biocon, which is trading lower. On the Nifty mid-cap, Biocon trading lower, around 3% odd down. Patanjali Food also taking a knock within the mid-cap space. MRPL and JBM Auto are the other two names within the small-cap space I want to highlight. Those are some of the top losers in the Nifty small-cap 100, Tamanna.
You are seeing a spot of strength, I would say, even in some of the real estate players. Those aren't doing too badly. When it comes to your micro caps of Force Motors, of Solara, and Aztec, all having an interesting play over there on the other side, on the loser side of Puravankara, Orient Cement, and you're seeing those spots of weakness there. Overall, I would say range-bound trade, but the big stories continue to be, one, what's happening with Coal India and why so much negativity there? Is it warranted? Secondly, HDFC Bank, have investor concerns really now been allayed, and we'll come to all of that. Of course, the talent management pull and push between a Kotak Mahindra and Federal. But let me come to Soni Patnaik and Dharmesh Kant. Soni Patnaik is AVP JM Financial Services. She's speaking on the technicals today. Dharmesh Kant, head equity at Chola Securities, will be speaking on the fundamentals. Welcome to both of you. Soni, I have to start by asking you where you think the Bank Nifty is headed yet after it's shown this boost, since been in a range for quite a while. Do you think you're seeing new levels soon?
Hi, good afternoon, and thank you so much for having me on the show. So I think talking about Bank Nifty, of course, it's looking good from current levels because, 47,000 was the level where maximum options pain was present. And this level has just getting tested right now. So I think from current levels, you can see positionally, Bank Nifty is looking good. Like 46,000 is an immediate good support. So from 47,000, of course, the next step is to test 48,000. But ultimately, I think over a few days, it will definitely head towards 49,000 plus levels also. I think it's quite good, and risk reward ratio is also quite favorable to enter at current levels with 46,000 as a very strong support.
Dharmesh, quick word from you on what we're seeing in IT in terms of weakness. Yes, so overall, markets are off their day's highs, but IT taking a harder knock on the chin, and not just your TCS, Infosys for IT, even a Coforge. Do you see this as a result of bond yields hardening, US Treasury hardening, and perhaps that interest rate fear now setting in?
Yeah, good afternoon, Tamanna. Definitely, yes. I mean, the CPI and the PPI data which came out for the month of January in the US has something to worry about as far as the timing of the interest rate cuts is concerned. And Indian IT, the entire space was just backing on the theme that once the interest rates starts getting lower in the US, discretionary spends will again start in a big way, and that will help them get the order book in place and the future visibility. So that was the challenge for the IT sector. It's in a trading zone right now. Unless that happens, I don't think Indian IT companies, especially the large cap ones, are going to benefit or see a trending uptrend going forward. So that's the problem out there, because they're still short of products which the current IT space is coming up with, and that is all to do with generative AIs and machine learning and stuff like that.
Sure. Right, Dharmesh, thanks for that. Now, a couple of days of declines that we've seen where Coal India is concerned. That's a stock of the day. We're looking at Coal India again, a loser in trade today as well, 3+% lower after that 4% knock it took yesterday. Couple of reasons, Tamanna, that have come through, adverse reasons. One is that your production target has fallen from roughly 770 MT to by around from 780 to 770. That's largely because there was an environmental or a clearance from the government which did not come for one of the subsidiaries of Coal India, thereby having a 10 MT kind of a knock in this year's production for FY24. And then, of course, the other one was with regard to e-auction premium. Your e-auction premium was 100% plus in Q3. It's fallen to 35 to 50% in Q4. At least till now. But that is just 13 to 14% of the revenue. So really, I'm trying to understand here as to what would the larger impact be here. Not very clear on exactly what the impact would be, because though e-auction premiums have fallen, but your volumes are higher on the e-auctions. And there ought to be an offset of that.
They will have to come in for much higher volumes to make up for the e-auction. And I think the big takeaway from the con call was very clear idea that you will see at least a 10 metric ton reduction.
Correct.
The analysts we've been speaking to through the day say it'll be 10 to 15. mixed views as far as brokerages are concerned.
Correct.
That have still kept the target prices up. Interesting to know Dharmesh's view very quickly on a Coal India. Do you think it's getting bashed a little too much?
I think it's a healthy correction which has come into the play and good opportunity for investors to again get back into Coal India. So these minor adjustments will keep on happening. I mean, in a year or in a quarter, these things will do come into the play. But, you know, the larger picture is still 20, if my memory serves me right, 27% of the coal is still imported in India, and Government of India has a target of to get it to the 0% imports. So that is where Coal India is likely to step in a big way. And LPG usage in India is still very high. It's not that it's going to come down. So coking coal production would be required even for that matter. So I see this as an opportunity to, you know, lap into, if you have an investor, to get back into the Coal India and buy some at current levels. And not to forget, still trading at less than 8 times for your forward PE multiple with an ROE of more than 50%, strong cash flow generation, 5.5% dividend yield. So, I mean, it's just that some trading place, some minor adjustments will happen. And Hersh pointed out right, because there may be a slight drop in the premium, but the volume is going to take care of that. So, it's a knee-jerk reaction, a welcome reaction for new people to get into Coal India.
Very, very interesting. Thank you for that, Dharmesh. Sony, if I can come to you with regard to charts, how are they looking? Is this indicating that this correction could be an opportunity even on charts?
I think definitely, Hersh, it is indicating that, there's still some more downside left. Perhaps 430, 420 be the range where it can test. And maybe that would be the optimal range. One can re-enter the longs. But as of now, from current levels, just wait and watch. There's definitely like 430, 420 range can be tested. I think from there, that level, it can bounce back again towards 450 odd levels.
Absolutely. All right, that's the story with Coal India. But let me come to the other big story of the day, which is definitely Kotak Mahindra Bank. Now, they announced their rejig yesterday, which will take place effective from 1st March. And this might have had a spillover effect at Federal Bank. Vishy is joining us with all the details of why personnel rejig in Kotak Mahindra Bank is having this ripple effect on the Federal Bank stock today. Vishy.
Right, Tamanna. So what's happening here at Kotak Mahindra Bank is essentially a large management rejig. And the first one of those, the most important one of those, is the elevation of KVS Manian from whole-time director and head of wholesale banking to joint MD. That literally puts him at the second in command position at Kotak Mahindra Bank, right after CEO Ashok Vaswani. We have then the next appointment is Shanti Ekambaram, goes from retail head and whole-time director to deputy MD from the 1st of March. After Shanti Ekambaram, of course, there's Devang Ghiwala, who's going to be taking over as president and group CFO of Kotak Mahindra Bank. He'll be replacing Jaimin Bhatt, who will retire from his group CFO position at the end of this financial year. There's also Milind Nagnur, who was a CTO at Kotak Mahindra Bank, will take over as a chief operating officer from the 1st of April. That puts him in the KMP league at Kotak. And lastly, we have Paul Parambe, who's currently working with the bank, and he takes over a group level position as chief risk officer from the 1st of March. So this was largely a rejig that's happening at Kotak Mahindra Bank. What is interesting to see is that this is the first big move that is being done by Ashok Vaswani since he took over as MD and CEO on the 1st of January. This is the intent behind this is, of course, to retain the senior management pool so that they don't end up leaving the bank. That was one of those fears right after Uday Kotak stepped down as MD and CEO of Kotak Mahindra Bank. The fear was that the larger or the top management will also follow him and probably leave the bank. But clearly, Ashok Vaswani ensuring that these people stay back. Now, the collateral impact, as Tamanna was talking about earlier, the ripple effect that's being felt is at Federal Bank. That's primarily because of KVS Manian. NDTV Profit had reported that Manian was being considered as the potential CEO candidate for Federal Bank. This was reported last week. Federal Bank is set to submit a few names to the RBI as potential CEO candidates, at least 3. That's what we understand from our sources, and that was likely to happen at some point in time next financial year. Now, if Manian decides to stay back or whether he will come in as a CEO of Federal Bank, that's something that we need to watch out for. That story will get clearer as weeks go by. However, direct impact on Federal Bank, it rallied about 10% after the story came out about Manian being considered as a potential CEO candidate. And then today it's down roughly about 6.5 or 7% odd. That sort of enthusiasm amongst investors, that's coming off in case of Federal Bank. And of course, all of this is happening because the CEO of the fourth largest private bank in India decided to rejig his management. Another stock that is actually trending in trade at this point in time is HDFC Bank, up about 2.5% today. Hersh, if you want to take us through what exactly happened at HDFC Bank and why is it that investors are so keen on trading in the stock?
Well, yeah, 2.5% higher, Vishy, correctly pointed out by you. HDFC Bank also in focus, and it's a welcome step, at least for investors. The kind of commentary that's come through, it's been clear, it's been concise, it's been crisp in terms of taking ownership of whatever has been going on over the last couple of quarters in terms of weak commentary, in terms of weak guidances. It's come out, or rather Sashidhar Jagdishan's address to investors, it's come out, and what he suggested, he's taken full ownership, and he suggested that deposit growth will come back. One will have to be patient, and most importantly, they will focus on EPS growth. That has been the big question mark as to when does EPS growth start to kick in. But he's continued to say that priority will be to grow EPS. And clearly, the reaction on the stock seems to suggest that the market has taken his comments favorably. Also, to add one more piece, and we'll try and discuss the whole banking pack together, right, Tamanna?
Right.
But, just to put one more piece together, Kotak Bank also, the criticality of having all of the management stay back is also from a perspective that their larger strategy, their larger goal over the last 5 years, 7 years continues. It does not, there is a bit of continuity in strategy. That does not change considering that the management stays back. And that, I believe, is also one big positive, which also what analysts are also suggesting.
I think, in corporate India, we sometimes underestimate the importance of talent at the top. Globally, it's a huge mover when, you have that kind of a move. And that really... what the management is, who it is, and what they are communicating becomes key. But talking about Sashidhar Jagdishan, let's listen into what he was saying. And these are some of the key pointers of what he said. We played it out first on this show yesterday, and you're seeing the impact on the stock today.
Our narratives could have been better. And I take it upon myself that it's a learning for me. With all humility, I do reckon, and we will be focused. As I said, we'll have our single-minded focus is to create a very sustainable franchise, and our focus is going to be on profitable growth. And that's the only metric that I'm going to be looking at for years to come, and especially during the period of transition. We will not disappoint you, that I can assure you that. We realize that effectively we have preponed the loan growth. So I need to now have that period of, I would say, transition time to warm up the engine to raise that amount of equivalent, granular, sustainable funding to be able to substitute some of the bond maturities so that I can have a reasonable amount of share moving up. And so that matching with that of the loan market share. Obviously, it's not going to happen overnight. It's a kind of a glide path that we will be seeing. In the meantime, obviously, whatever I raise, if I raise a lot more, then I'll have enough to maintain reserves. I'll have enough to pay off the bond maturities or the loan maturities that will come up there, and the balance we'll deploy it. If I have constraints because of the monetary policies or monetary situation, liquidity situation in the system being rather tight. To that extent, it will be much lower. But yet, just by repayment of the high-cost borrowings, you will see the trajectory of profitable growth continuing.
Yeah. Okay, so those words seem reassuring, calming from Shashidhar Jagdishan. You're definitely seeing that in the stock move today, about 2.5 points up. So Shashi talk has helped. We'll take a very short break, but we're coming right back with the top volume buzzers of the day and what you should do next in today's trade.
Welcome back. Thank you for staying with us on India Market Close. A host of stocks are buzzing in trade today on the back of volumes. Anushi joins us with all of that. Anushi.
Well, Hersh, right at the top, we have Whirlpool Corporation in India in focus today after Whirlpool Corporation is selling up to about its 24% of stake via multiple block deals with this aim to reduce its debt using the proceeds it will receive from the stake sale. Again, the floor price is expected to be around 1,230 as per the Goldman Sachs term sheet. Moving on to next is All Cargo Logistics. Quite an up move here, about 13% of return. This is on the back of multiple large trades that happened, wherein about 3.8% of equity changed hands after the management made some positive comment on its margin expansion going ahead FY25. Next on the list is Deepak Fertilizers. Again, 11% of a return over here, in an intraday return over here, with the volumes buzzing in the 12 to 13 times its 30-day average. This was after the company signed a 15-year LNG contract with a Norway-based Equinor, which is supposed to be the margin accretive for the business going ahead. Next on the list is Zaggle Prepaid. The stock is up 16% today with the volumes in the range of 4x its 30-day average. Again, this is on the recent order that it has received today from Easy Trip and Questcore, resulting in 5 large trades, and thus we are seeing such high volumes. And lastly on the list is eMudra. While there is no specific news flow around it yet, this is purely on basis of higher volumes, with the volumes being about 4 times its 30-day average, and the stock seeing an intraday gain of about 5% in trade today.
Absolutely. So a lot of those volume buzzers on the radar. Thank you for that, Anushi. Quick word from Soni and Dharmesh on some of those stocks that we're discussing. Soni, any of those you track, especially Whirlpool and All Cargo? Whirlpool taking a knock, of course, after the parent stake sale news. But do you see any potential there, and views on All Cargo?
I think Whirlpool is not looking that impressive on charts as of now. It has, of course, taken a hit today. But the moment if it's not able to cross 1350, 1360 on the upside, there could be some more sell on rise sort of a pressure. And that structure is quite firm. So I think it's looking quite weak on the medium term also. If we can see then to the next important support coming for this stock is around 1230. I think that stock can, just like sort of wait and watch until the 1360 resistance is crossed. And talking about All Cargo, I think this stock is sort of better than Whirlpool, and, it has seen a lot of volume action today as well. I think going forward, definitely it can test 92, which is its next hurdle, and immediate support that can be trailed and look forward to is 82.
Okay, so those are the levels to watch out for. Dharmesh, if I can come to you very quickly before I allow you to go. With regard to some of these private sector banks, we were speaking about 3 of them: HDFC, Kotak, Federal Bank. All 3 moving on slightly different topics, on slightly different cues. HDFC Bank now up 2.6%, sitting at the day's high, sitting extremely pretty. So is Kotak Mahindra Bank. Dharmesh, your views, what should one do, and how do you look at valuations at the moment?
Yeah, I'm saying interesting moves today, and it has more to do with a sentiment move on all 3 counters. The news flow is same, and the reactions are different based on the same news flow. If given a choice, I would be buying Federal Bank rather than HDFC or Kotak Bank, because HDFC, it has been a performer for last 25 years, and that benefit of faith has to be given to their management that things will return to normalcy. But that any credit growth in today's world has to come from the retail segment, because corporate India is already flushed with liquidity. Equity is cheaply available, so there's no need for corporate borrowings anymore. It has to go through the retail route, and there the problems are coming up in most of the pockets, be it MSME, SME, or the personal loan segment. That's the unsecured portion. That is what we are getting a feel on the street. So it will be interesting to see how these companies boost their EPS and go away from the traditional strategy, which has been more on a conservative front. Federal Bank, having said that, will definitely find its successor at the top. There is no dearth of talent in the country, and they have been performing well for the last 5-6 years. The journey of Federal Bank has been phenomenal. Their book has almost doubled in the last 5 years, and I do think this opportunity for value investors to get into Federal Bank. So valuation wise and the future outlook, if you ask me, the growth where the alpha is going to come from, it would be in Federal Bank rather than a Kotak or an HDFC Bank.
Absolutely. Thank you so much, Dharmesh, for speaking with us today. Soni, please stay on as we turn our attention to what's happening on the F&O side of things. Agam, muted day as far as the top line is concerned, but the action in banks and Fin Nifty expiry as well, isn't it?
Yes, absolutely. And, through the course of the day, we've seen both the Bank Nifty as well as the Fin Nifty outperform the Nifty 50. And that's largely on account of the strength that we've seen return to HDFC Bank. I'll come to that in just a bit. The Nifty, of course, flat at the moment, and a little bit of unwinding of older positions to the tune of 2.5% as far as your open interest decline goes. The Bank Nifty, on the other hand, showing strength. We should have Bank Nifty for you in just a bit, which has in fact advanced by as much as 1%, and looking at some longs building in there as well. In terms of the options market at the moment, we continue to see a lot of traction with respect to the 22,100 calls and puts. And considering we've seen a flattish day of trade, we aren't seeing too much in terms of change there. That said, we're still looking at a 500-point range between 22,000 on the lower end and 22,500 on the higher end. And moving on to stocks, Fin Nifty. The Fin Nifty at the moment, of course, is trading somewhere around 20,700, 20,800, and that's something that will be taken as a positive in both hands as far as bulls are concerned. But let's move on and talk about stocks then, and that's where we see a little more focus coming through. So Balrampur Chini and Deepak Nitrite looking at longs, and Hero MotoCorp, Federal Bank and Coromandel International under pressure, looking at declines. Federal Bank, of course, seeing a sharp cut of around 5.5%. And in terms of stocks which are seeing unwinding, we are in fact looking at a long list of those stocks which are seeing a longs unwind. Coal India, Metropolis, Ipca Labs and MGL, all of them looking at a bout of declines in open interest even as the underlying comes off. And once again, we continue to keep an eye on the banking indices as we move into trade tomorrow, where of course we will have a lot more traction with respect to the Bank Nifty weekly options expiry. But as far as the Nifty goes, a quiet day of trade.
Quiet day of trade on the Nifty, not so quiet for one specific stock. So the ZEE stock has been zooming in trade today, and one of the reasons very clearly is reports that there may be revival of conversations between the two sides. Now, what NDTV Profit has learned is that talks are taking place at the level of lawyers. Lawyers of both ZEE and Sony are engaging in merger talks at this point, but the ball really is in Sony's court whether it wants to revive any of those conversations or go ahead with the merger. There is no deadline as such which has been stipulated as to when they have to get back or when ZEE has to get back, but at least the fact is that there seems to be no real reason why Sony would come back to the negotiating table, because the stalemate over key issues that tanked this $10 billion merger on the 22nd of Jan have not really been resolved as of this point. The question is, why are investors still seeing this as a positive? And that truly is at the end of it, whether it's a ZEE or a Paytm, not saying anything negative about these companies or these counters, but both with a lot of uncertainty and no real reason as to why you're seeing this kind of a bump up, Hersh.
Well, yes, you're right, Tamanna. It seems like the market is pricing in or starting to price in some of the possible merger synergies which could play out, if at all that were to translate.
For ZEE?
For ZEE, yes.
My question is, why would Sony come back to the table? Because it was always ZEE who really has been pushing to let it go through, including Puneet Goenka stepping down, etc., etc. So,
but now it seems like it's the other way around. Sony seems to have approached ZEE, and there seems to be...
I'm not sure. What I have learned is that both sides are talking, lawyers are talking,
sure,
which in ordinary course of business they would, even though they're fighting it out in courts. Those channels are always, legal channels are always kept open. So I don't know how much of this is really going to pan out. But let's go across to Sony on some of those stocks, ZEE and Paytm. Fundamentally, everything is up in the air, Sony, but are you seeing any potential on the charts, both at or near circuits?
I think, Tamanna, for ZEE, we'll have to wait until 210 is crossed. I think that's a resistance level, and the stock has been consolidating. It of course has a very broad range of consolidation. I think somewhere around from 175 to 195 and then 210 also. So until and unless the 210 level is not crossed on charts, it may not see any significant short covering. So maybe only above that level we can see it fill the gap up to 225, 230 odd levels. So I think that's the level one has to definitely wait for. Talking about Paytm on charts still looks quite weak. It's just some bounce back that we can see after a lot of correction that has happened. It still does not fall under any parameter where you can say that it's a good buy from current levels. It's definitely an avoid on charts as of now. I think there are a lot of resistances coming ahead, like around 400 and 420, multiple resistance zone. So it definitely poses as an avoid from current levels.
Yeah, absolutely. It's an interesting time in the markets where there is liquidity, there is capital chasing ideas. But are the best ideas really out there? As I'm going into this break, I just want to play out a snippet of a conversation I had today with Avendus Capital's Andrew Holland. And this really was an interesting quote where he compared the markets today as arriving at a party perhaps a little late, where all the food and drink is over. Listen in.
It's been a great rally, don't get me wrong, and I think everyone's scratching their head a little bit of how they missed it. But, it goes back to, when, the market's where they are at the moment, and I'm not saying there won't be a pre-election rally, but, when you arrive late at a party but all the good stuff has already been eaten or drank, and you're kind of left with some of the, I'm not saying the scraps, but some of the leftovers. That's where I'm feeling at the moment. I just don't want to kind of push into this market so aggressively, when a lot of the gains have already been made, individual stocks rather than just the indices.
This is turning into an exciting afternoon. I wouldn't say in absolute terms a massive move on the index, but we're closing in on the 22,200 levels. So a fresh record, the last record being 22,186, after which you saw a spate of profit booking coming in yesterday. What's driving the Nifty at this point? And it's banks all the way. It's something we addressed right on top of the show. Of course, power grid because of that Bernstein report, but in terms of contributors, look at what happens when an HDFC Bank moves. The same way after its Q3 numbers that HDFC pulled down the market, the bank is now, or the counter now has moved up the markets. Even an Axis, a Kotak Mahindra Bank, all of them really fueling through. Yes, you have exceptions like a Coal India or an ITC because of news, at least as far as Coal India is concerned. But it's a bank story through and through. Even if you look at the heat map, and we'll pull that up for you to look at really what's moving, it's bank all the way. You also have an NTPC doing fairly well this morning. So banks, your PSU companies, and the weakness coming in largely from some of the two-wheeler spaces. In the last half an hour or so, you've seen Bajaj Auto slip fair amount, and Eicher, even a Tata Motors not doing too great. Of course, your IT pack showing its bout of weakness. But look at a Hero Motor down about 3.5% at a time like this. But the top line, or the big takeaway, of course, that Nifty at all-time highs. The Bank Nifty also looking spectacular. I just want to quickly pull up the line graph for the Bank Nifty, and look at that, over about 540 points right now, near its day's highs as well. Deepan joining us now. He's founder director at Elixir Equities on Fundamentals. Deepan, welcome to the show, and we're speaking to you at a great time because to truly go into the next phase of the bull run, you need the banks and the private banks to come on board. Do you think they've entered that party?
Yeah, good afternoon, and thank you for having me on your show. Yeah, I think they can enter the party anytime. They were actually the initial participants of this party. I think this entire bull run last 3-4 years ago started with the private sector banks, and some of the baton has been shifting from banks to PSU banks to other industries, and now back to private sector banks. So yes, I think this changing of the leadership positions is very common in a bull market, and certainly I think there is a lot of value in the private sector banks, and there's great earnings visibility. So I'm not surprised if some buying is coming through in the likes of HDFC, ICICI Bank, IndusInd, Axis Bank, so on and so forth.
So we've hit 22,200, and then we've pulled back a tad. You know, frankly, that 22,200 number is emotional, sentimental right now, but it just looks beautiful on that screen. Quick word from Sony on whether we can hold above those levels.
Absolutely, Tamanna. I think it's looking quite strong and must continue. Nifty, keep on trailing a stop losses, of course, if somebody's playing for the longer side. And going forward, we can definitely see 22,500, 22,600 also on the cards, especially when it is being driven by Bank Nifty support. So like I've just discussed a while back, Bank Nifty is also looking quite good, and 48,000 on immediate basis looking on the cards. So I think both indices can be held on to for those targets, and keep trailing a stop losses above the cost. Of course, it just helps in case there is any sort of intraday dip. Everything just gets into bot. So I think that's how the market are framing at the moment.
Sure, thanks so much for that, Sony. Deepan, coming back to you with regard to banks, Hersh also joining in. Deepan, talk to us about what's today's market is largely been driven by HDFC. Is there enough comfort now with all the statements that have come out?
See, I think it's still work in progress, and although the sentiment is gradually improving, we'd like to see actual numbers flow through in December quarter, in March quarter and beyond, because there were certain negative surprises last couple of quarters, and the integration with HDFC is going to be more difficult and has created a whole host of uncertainties which were not earlier known. But if you're bullish on India and the India story and the Indian economy, then the largest bank, or the second largest bank, that being HDFC Bank, is certainly going to prosper. And valuations are at historic lows, so you can always justify buying into HDFC Bank. To a large extent, I think the over ownership also has got corrected. And this recent news that LIC is permitted to increase its stake in HDFC Bank creates fresh room from LIC's point of view to acquire stock. But of course, they will do it at their price and at their time.
Understood, Deepan, point taken. I'd like to switch focus. Top gainer for the day on the Nifty, Power Grid. That one's up 4% in trade. We had an initiating coverage note coming in from Bernstein. Very interesting with regard to what they believe is a great story in the power transmission space, especially given that the ROEs are kind of 15.5% odd, and that's regulatory. The regulator has allowed that kind of an ROE pricing to happen. We have Varsha joining in to try and break down what within Power Grid does Bernstein see as the key takeaways from that note.
Hello, Hersh. So if you see, this stock is 78% up in last 1 year, 21% up in a month. This is a stock with 4% dividend yield, 15% ROE, as you rightly mentioned. This is a capex heavy business, but gets a debt of at 8%. Now, Bernstein has initiated coverage where it rated Power Grid and outperform. The reasons why it has initiated coverage is first, it sees increasing transmission need and also interstate transmission. Batteries, smart meters are new growth areas according to Bernstein, and access to fund, as I said, is at a low cost of debt. Also, regulator is grandfathering existing assets at 15% of return. Now, capex over the next 2 years is almost 30%, which is understated by consensus. Also, this is a low beta stock with 18% ROE, 8% PAT growth, and with strong governance. And price to book calculation, if you see, it implies a fair value of 3x currently, which is hovering at around 2.7x. Also, company on Monday approved investment worth rupees 656 crore for the implementation of electricity transmission projects in the country. So, this is the reason we are seeing uptick in stock.
So, Power Grid actually, on a electrical kind of a runaway today in the market, up about 4.5% on the back of that Bernstein note. But that's not the only story, I would say. Look at an NTPC also doing fairly well. Deepan, just your take as we reach those and hopefully sustain over those 22,200 levels. Yeah, we seem to be right now. The Nifty right now definitely sitting pretty above those 22,200 levels at 2208. What a fabulous number. So you're seeing that breakout over there. I'm talking about sustainability, Deepan, and where the next leg is going to come from. Would we need banks to participate holistically and sustainably? Can you do that without the IT pack coming to the fore? And do you think, your Power Grid, NTPC kind of space will also fire up?
See, I think, in a bull market, you're going to see changes in leadership, and, banks have taken the Nifty to these levels. Earlier, they were laggards. So the leadership position will keep on changing. But if you ask my view, I think it's time to be a bit cautious. I have been saying so. But of course, the market listens to no one. It's just been rallying one way up. But I do not expect that investors and traders buying into the market at these levels can expect any significant outperformance. So I'd be a bit cautious. And even if you have money to invest, better to wait for a correction. At some point of time, you may see 10-15% of a correction also. And those are good entry levels. Today, there are very few good quality stocks available at reasonable valuations. And of course, we are seeing a lot of action in PSU stocks. And that's because these stocks have been traditionally cheap. And we are seeing a decade-old correction adjustment taking place in their price to earnings multiple, and under ownership being corrected over there. And of course, I think prospects also improve for PSUs. But beyond that, I think, to try and extrapolate significant growth in earnings to other sectors and justify a higher price to earnings multiple for other sectors and other stocks is not something that we are buying into.
Got it, Deepan. If I can switch over to Sony. Sony, 88 points on the Nifty, 80 plus, if we can call it, give or take 5. But 80 points on the Nifty, 60 plus contributed by HDFC Bank alone. How is that one looking on charts? Can we now see an uptick from here? Has the bottom being made?
I think, Hersh, it is safe to say for the temporary time being, definitely we can see that some bottom has been done. And, 1400 was the level where it was struggling a lot and, plus minus 20 odd points. But then came the decisive close above 1400, 1420. And from there itself, it has been rallying up. So going forward, definitely, I think 1550, 1580 is on the cards. It will be a positional play. but definitely one can take the risk from current levels and keep your stop losses at 1420 and look for targets of 1550, 1580 for the coming days.
This is very clearly a Nifty and private bank story, because if you look at the broader markets, you're not seeing that kind of an excitement. The mid cap 100 slightly in the red, even the small cap stocks about 0.5% down. So you're not seeing that same buzz in the small and mid cap space. This is definitely and firmly a story about the big boys and the big girls today in this pack. And Deepak, I just want to come to you on that. As we progress towards a bit of choppy waters, you're saying let's be careful. Are you going to see some of those profits come off in the mid cap space?
I would hope so. I mean, I think so. So, the whole idea about investing is buying good quality stocks at reasonable valuations. That's when you get a superlative performance. And I don't see very good quality businesses available at reasonable valuation just now. And that's why, my opinion that we need to be a bit cautious. Also, this earnings season, in my opinion, has been slightly below expectation. A lot of it because of base effect, and a lot of the profit growth has come because of lower costs, and that cannot be sustainable. There's clearly stress on the top line and volume growth across the industry. And I think we will see more of that in the March quarter as well. So if the earnings are going to, have a slightly, I would say, tepid, growth over the next 2-3 quarters, there's no reason to be extraordinarily bullish on stocks. No doubt, I think liquidity is coming very strong to the market, and that's keeping stock prices elevated. But from a fundamental perspective, you want to get into the market when valuations are reasonable and not get driven just by liquidity flows.
So, Deepan, if I can ask, where are valuations reasonable? Where are you looking at valuations which may be, is it chemicals? Is it certain parts of manufacturing?
Well, that's the question that I'm asking all the time. That where is the valuation comfort, and I don't have an answer to that.
Sure.
What are you doing in these markets right now, Deepan?
Just waiting and watching, maybe taking holidays.
Yeah, really? Seriously?
Enjoying the bull market.
No, you're pulling our leg, because I'm talking to you with Nifty above 22,200. You're saying you're taking holidays.
This is the best time to relax and chill because there's no hard work required. I know for a fact that whatever stock I buy today, I'm going to most likely make a mistake. The real action happens when the markets are in a kind of a subdued scenario, and markets like these just want to enjoy. And of course, more or less, whatever investments you have made, you are seeing the fruit of that patience being paid off. But as I said, I think it's just best to wait and watch. As an investor who's invested over the years and decades, it's like a fulfillment of whatever, you have gone through and all the bear markets you have lived through to see such a day. But I know that from my experience that buying at such tops and such elevated levels 2-3 years down the line doesn't always make the best of the returns. So from that point of view, I want to be a bit cautious. And I think it's a good idea for investors to be anywhere from 10 to 25% in cash. That cash is strategic. Should there be a correction and you put that cash to work, that's how you get the next leg of outperformance.
Got your point, Deepan. But Deepan, one thing that Tamanna and me were speaking about in the morning, $2 billion worth of sale which FIs have made. 5 years back, that would have meant carnage in a month-to-date period of maybe 15 trading sessions. Not happened now. We're seeing plenty of cash held by mutual funds being deployed. SIPs are at an all-time high, at record highs. So where is this correction really going to come from? Because flows are completely against what you seem to be suggesting.
That's right. I think the wild card in my entire analysis is the money flows which is coming in. And we don't have a handle how much money will come in. But all I know is that the market is getting bigger and bigger. The capitalization is going higher and higher. And at some point of time, you require even more money to keep the market prices afloat. And that's when perhaps, you will see that the liquidity coming in is not adequate to keep the stock prices elevated. But till then, I think, it's all right. We are in a phase where anything can happen and you could have extraordinary gains. There could be a parabolic move as well. But that doesn't mean that, you should participate in it by putting fresh money to use. Mind you, I'm not recommending that you completely sell off your portfolio and go 100% into cash. It's just that, strategically, these are good times to create a bit of a cash buffer and not get carried away by investing in the markets at these levels.
Absolutely. Let me get Sony in on it, and specifically on one space which is apart from banks, and we've been talking banks all afternoon because they are the heroes of the day, but reality is not doing too badly as well. And you're seeing quite an uptake in some of those counters. Anything that you like at this point and at these levels, Sony, where you see an upside? I mean, a Macrotech DLF are all about 1.5–2% up. I'm also going to quickly pull up Raymond. They've announced a project in Mumbai's Bandra. They're going to make a gated community. You saw that spike and then a pull off, maybe because investors are wondering where you will get that much space in Bandra East, some 16,000 square foot. Maybe that's one of the reasons. But that's on a lighter note. Sony, anything you like in this space?
I think, Tamanna, we can keep a watch on DLF. DLF becomes a conditional buy only when it has crossed the level of 870, and most likely most likely by tomorrow or day after tomorrow, if we see that level being crossed, it can head towards 900 also. So I think that's a good level to watch, and immediate support. It has a lot of supports. I think 840 is a very crucial support to watch out for. And as long as 840 is getting held and defended, definitely it will try to take out the resistance of 870, above which 900 is on cards. I think so. This is one be the stock which can outperform the rest of the stocks also. I think this could be a good pick from the realty sector.
Understood. And Sony, while we are at it, BTST ideas?
Right, so BTST will be from Voltas. Voltas is looking quite good with fresh breakout, and can keep a stop loss of 1,095. It can definitely head towards 1130, 1140. So this is the first idea. The second idea would be in Power Grid. Power Grid has seen an inverted head and shoulder breakout today. It has also seen a lot of aggressive long wilted positions to the tune of 5%. So I think Power Grid is looking quite positive from current levels, with 282 as a stop loss and 300 can be a target.
Yeah, absolutely. Deepan, just a couple of minutes left for market close. Your word on whether you think this momentum will sustain for some time?
I think so. I think that technically it's looking much stronger now that the previous high has been crossed and liquidity flows remain strong. So intuitively, I can tell you that the up move has got more feet and more legs, and certainly the markets can trade higher in the short term. But the real question is that from a trading perspective, it makes sense to go long. But from an investor's perspective, I think the risk return profile doesn't favor you.
Yeah, absolutely. Thank you, Deepan. Thank you, Sony, for being with us on a very exciting afternoon, I must say. And let's just wrap that all up for you. A couple of minutes to go as the markets close, and what a day it has been. Most of the action you're seeing is in the last, I would say, 20 minutes or so. Markets looking like they're going to close at their day's high. We have crossed, ladies and gentlemen, 22,200 and sustained there. You hit once and came back. We pulled back, but we have sustained now. Let me just pull up the Nifty line chart for the day to give you a sense of how this entire day panned out. It seemed tepid and quiet as far as the Nifty is concerned, but towards the end of trade, here you are, and you're looking like you're going to close at the day's highs. Towards the end of trade is where all the action began. Be interesting to see if FIIs came in the last hour of trade or so, and if that's what's pushing up the markets. But really, no need to look too far to guess what has pushed up the Nifty. Let's pull up the heat map, and it's all about the banks. Shashidhar Jagdishan may have done the trick, not just for HDFC Bank and their investors, but the entire banking pack, and as a result of its heavyweight nature for the Nifty as well. So HDFC Bank up about 2.5%, Axis Bank doing well, Kotak Mahindra Bank also, but there's a whole different story playing out there. That is a management rejig which they have done. They've managed to retain top talent. One of those was headed to Federal Bank, which has hit the Federal Bank stock now, but nevertheless, Kotak Mahindra Bank having a really good day. Power Grid there closing at a percent plus uptick because of a positive Bernstein report. On the other end of the spectrum, what hasn't worked? I would say last hour slide in some of your two-wheeler stocks. Some data out there suggesting that perhaps two-wheeler sales are not as good as was expected. So you have Hero Motor down nearly 4%. Bajaj Auto also feeling the pain. Coal India is stuck over here. An analyst call has gone sideways. Management commentary on the kind of guidance they see has not gone down too well with investors, and Coal India has been seeing that pain point coming in. Bank Nifty, I just want to focus on the Bank Nifty for a bit because that's the story of the day. If you're looking for one snapshot of what's happening, you should look at the Bank Nifty and the Bank Nifty contributors, because that's telling you the whole plethora of range of what happened in this market. I was talking about a federal bank. So Mr. Manian has been retained by Kotak Mahindra Bank. That stock up 2%, but Federal Bank on the other hand 5% down is where it's tending to close. Since we have closed officially, I just want to see what the Nifty finally closed off at before I get Hersh in on what is happening on the broader markets. 22209 is where you have the Nifty closing, record high, all-time high. And today, Hersh, the story is about the Nifty, not really the broader markets, isn't it?
Absolutely. You look at the broader markets, Nifty mid-cap largely flat. Nifty small-cap, in fact, closed in the red. There you go, around 0.09%, as flat as it can get for the Nifty mid-cap. The small-cap, in fact, down 1/3%. And that's evident from the advanced decline ratio as well, Tamanna. Advanced decline ratio strongly in favor of the declines. Maybe not strongly, but definitely in favor of the declines.
Yeah, that gap narrowed, right?
Yes, right at the fag end. So that's how it's played out. And with regard to some specific names on mid and small, let me first pull up something like a ZEE, Paytm, Sonacom. ZEE closed higher. 6.5% is where it settled at. It was up 10+%.
Yeah, there's a story we covered all day. I don't know. I mean, there's hope that maybe some miracle will happen and talks will revive, but let's see where that goes. Yeah.
Yes, we'll have to wait and watch how that plays out. Paytm, second day in the sun, 5% higher for Paytm there, and you have Sonacom Star, which was also up. Quickly on to some of the newsmakers, something like a Federal Bank. There you go, Sonacom Star up 4%, substantial. Federal Bank was down 5%, not a bad close after what we saw, almost 7% at the bottom today. Biocon was also down, it's closed I think around 4%, 3.5% odd lower. And you have the likes of an Adani Power, Apollo Tyres within the mid-cap space, which have also closed lower. These are the top losers on the Nifty mid-cap. On to the small-cap, Renuka, Glenmark, Deepak Fertilizers were three names which have closed strongly in the green, the top three gainers on the Nifty small cap. And then within the loser pack, we have MRPL, JBM Auto and SJVN.
Okay, so MRPL seeing a bit of a pullback. Right. Renuka, perhaps some buzz about whether ethanol makers will get a bit of relief. So all of those news pieces playing out. But exciting day all in all. We'll have to wrap it here. So from Hersh, me and the entire team, thank you so much for watching. Stay tuned though, an interesting conversation coming up with the management of Deepak Nitrite. watching Earnings Edge on NDTV Profit, and as we're just wrapping up the earnings season, today we're talking about Deepak Nitrite. Now, the specialty chemical space has had a tough time over the last few quarters. The question is the worst over? To speak more on the Q3 numbers and the road ahead, I'm joined now by CEO Maulik Mehta. Maulik, great to have you on NDTV Profit. Superb to speak with you. Let's begin by taking a look at what this quarter has been like, and not an amazing one. It's been a slow sort of a quarter. Revenues flat, EBITDA is mildly down, margins have narrowed, net profits as well. Is this the tail end of the pain that we've seen in the space playing out in Q3 as well?
So I do agree that quarter three has not been a quarter of remarkable numbers for Deepak Nitrite, standalone or consolidated. But I also believe that we have shown a significant ability, remarkable ability in that sense, to remain extremely relevant in the Indian chemical industry and its ability to supply to the world. Now, when we're talking about margins, yes, margins have been affected. Partially, that is because of volatility in the feedstock prices, partially because in the AgChem segment, a lot of customers that we have had their books being closed for December 31st, and they had an unusually difficult CY23. Now, moving ahead, once one looks at the pain that the chemical industry has been going through, I think part of this pain is to be seen in terms of the kind of challenges that it has gone through over the last year and a half. That challenge is, in most cases, ones which have not been expected. So whether it is the Red Sea crisis, whether it is the Ukraine war, whether it is these geopolitical tensions that have led to a delinking. Now, the chemical industry worldwide thrives when there is a stability, because customers and suppliers can plan long, have order books accordingly, and they become a little bit skittish when there is global geopolitical uncertainty. And because of that, there is always a quarter catch-up in terms of resetting what they consider as the new normal. Looking forward, what we can see from our own markets, as well as the supply chain that we are intrinsically linked to, we expect the demand resurgence to start from Indian consumption improvements. And we are also seeing a general worldwide improvement in terms of customers' confidence in its buying strategy over quarters. In the beginning, this means that there is an improvement in volumes. And over a period of time, this means that there is an improvement in margins, as customers and suppliers are willing to settle down into a predictable planning strategy. Now, Deepak is broad in its sense of being able to supply to AgChem, pharma, materials, construction, paper, detergents, etc., dyes and pigments, and hence we are de-risked in that sense. We don't have an over-dependence on one segment or another. At the same time, we do have 30% odd dependence on AgChem in the standalone business. And here we are seeing that there is an improvement, as I mentioned earlier, in volumes. And moving forward, we are certainly seeing an increase in wallet share. So over the last 6-8 months, what we have been doing concurrently is also brownfield capexes. And where brownfield is not good enough, greenfield capexes, to be able to maintain or increase wallet shares. Right now, we've done it by increasing our headroom with existing plants. But over the next 12 months, there's a lot of semi-greenfield or significant brownfield expansion that is due to be commissioned.
Okay.
We remain bullish.
All right. So you remain bullish. Deepak Nitrite is looking at recovery mode. You're saying it will start from India. So let me begin with what kind of timelines you have in mind or you're predicting? Because if this is determined on geopolitical factors settling down, that's something that has very little predictability one way or the other. So I want to understand the optimism when you say that recovery will come, and when do you think it begins?
So geopolitical uncertainty by its nature, I don't expect geopolitics to settle down.
Yeah.
This is a year where 90% of the world's democracies go to vote. I don't expect any sort of normal this year.
Yeah.
It's never happened in history, and I don't know when it'll ever happen next. But it's not the settling down. The settling down that I expect is in terms of the volatility, right? Now, for example, take the Ukraine and Russia war. There was a significant peak that took place with regards to natural gas availability as well as prices. But the war is not resolved today. In fact, it continues grindingly. Gas prices, on the other hand, have been able to find floor after floor over the last 3 or 4 months in wintertime. Right? So it is not about geopolitics settling down, but it is about the volatility calming down.
Okay.
So once that happens, all parties resume a sense of confidence in their buying and selling strategies. Also, it is pertinent to note that right now we're continuing to live in an environment which has relatively high-ish inflation trending downwards, but an interest rate which has not yet followed suit. A lot of players worldwide are hoping for that to happen imminently, but whether that happens in March or April or May, some of them have planned aggressive expenditures only following this rate announcement. So there is optimism. There are animal spirits led by India in that sense. But a lot of companies worldwide feel, at least right now, that there is no harm in waiting for a month or two before making any significant announcements or rejigging any significant parts of their supply chain.
Okay. In all of these factors that you mentioned, Mr. Mehta, I'm trying to understand how much of a pain point is the China factor, recovery in their exports, and some may describe it as dumping of chemicals from China. We've seen that impact chemical companies across the board. I just want to understand that context for Deepak Nitrite.
Sure. So China as a manufacturer of note should never be ignored, right? It's the largest chemical manufacturer in the world. Pretending like India is in a sense insulated or that it is delinked, or any region in that world for that matter. That is, I think it is high hope right now, and it is not a mature way to think about it, even though a lot of Indian companies do offer that as a solace. The chemical industry in China is plagued by a slightly different situation, in my opinion. And that is that, generally speaking, the Chinese government has supply side support that it normally offers. And over the last last 2 years, it has significantly impacted China's ability to consume. Now, the Chinese government is also belatedly realizing this and making a lot of structural changes in the economy's ability to consume. Now, generally speaking, China has not been known for being a consumption side policymaker like the US. But as it is improving on these things, and as these things start to have a domino effect, China's need to export everything that it makes, quote unquote, dumping, will certainly go down because it will end up consuming a lot more of what it makes. As its own consumers, either people or companies, will be given more support by the government to consume. And hence, as global sentiments improve, so will China's own appetite to consume its manufactured capital.
Okay. So let me come back to my fundamental question. When is all of this going to happen? 2 quarters down the line, 3 quarters down the line? Do you have any visibility in terms of, a takeaway that our viewers can get on when you see the cycle turning, and are you already seeing the initial signs of it?
I am seeing the initial signs. They're very fragile. They are tentative in nature, and they are currently sector specific in X or Y sector. Seeing a secular improvement, I think it will start to happen over the next couple of quarters. But if one is to consider going back to the normal of FY22 in terms of India's ability to participate in the world chemical space, I think that will be closer to the second half of FY25.
Okay, so there's clarity there. Second half of FY25. You also said a few quarters ago.
But you are seeing volume demand led resurgence.
Yes.
In this quarter as well. You will have heard the same commentary by a lot of other players. It is tentative. A lot of things can derail it, but we're positive that if that doesn't happen, it will snowball into consistent improvement.
I wanted to refer back to a statement that you have made where, you've said that you see revenues doubling in the next couple of years, if I'm not mistaken. Can you give us a clearer picture there? Are you on track to this happening, all things considered?
Tamanna, with the kind of investment that we're making over the next 4 to 5 years, if all we see is revenue doubling, then it will be really bad job with expenditure and revenues. That is something that we expect to happen over the next 4 years before the end of 2027-28. And hopefully significantly before that, while at the same time improving on our standalone and our consolidated EBITDA margins as well.
Okay.
So we expect to see across the board in all of our group companies an improvement in our percentage as well as, of course, our gross.
Okay. Let's come to some of, the details of what this quarter has looked like, and the phenolics segment has worked out very well. Tell us a bit about that. It's also part of your larger import substitution plan. So give us some visibility on how this is panning out and how you're going to expand this.
Okay, so Deepak, Phenolics is largely tied to what we would call the India growth story, seeing as a significant amount of its output is domestically consumed. And that remains a resurgent theme across the board. So we're seeing demand-led recovery from the Indian consumption side, and then it is expanding to other geographies as well. Deepak Phenolics has been able to ensure that it has higher gross margins as well as top line by preemptively increasing its capacity. What we have also done is we have ensured that even the current sales numbers that we have and production, by the way, the highest production on record for us in a quarter, we still have some headroom, and we will be able to cater to this growing demand without losing wallet share. So moving forward, the main challenges that one would see is if there is, for whatever reason, a dampening of the consumption spirit in India. We're not anticipating that so far. And building into that, we expect that in Q4, assuming that feedstock prices come to some sort of a more consistent level, that Q3 in terms of its volume and its ability to push into the market will be reflected in Q4. This is on the phenolic side. In the standalone business, nitrite, we were affected from our AgChem side because of our 30% exposure there. And in Q4, we're seeing that there is some sort of a more stable base that is being created with marginal improvement in terms of volumes in this space, but in other spaces, whether it is paper, whether it is textiles and pigments, whether it is fuel additives, etc. There we are seeing that there is a reasonably strong confidence, both in terms of the volumes that customers are willing to pick up and the time period over which they're able to give us a confidence of their order books. So a large part of that inventory destocking seems to have taken place in Q3 with remnants in Q4. And moving forward, customers are more confident about fresh purchases for long. And I think that margin improvements will follow suit.
In the next couple of quarters, you will see margin improvements follow suit?
In some cases, it will be with a lag of a quarter. In other cases, it will be within the quarter. In a handful of cases, it may be with a slightly longer lag. But all of this we expect should be normalized in one fashion or another over the next 3 to 4 months.
I want to talk a bit about the slew of MOUs that were announced recently, I think just a few months ago with the Gujarat government, close to 14,000 crore rupees. How are these going to be executed? What is the kind of timeline for this? And is this all linear? Can you give us a sense of this?
So when you're talking about execution, I assume you mean project execution? Okay. So there isn't exactly a linearity. However, there is a clarity that if one is to work backwards, there's a particular footprint with regards to consumption that we have tied down, which would begin from 2027 onwards. So working backwards from there, there will be some plants that will come up earlier, some plants that will come up later, but by and large, it's a 4-year roadmap. And the speed at which plants get commissioned is significantly dependent on the technology and the tie-ups also. And in terms of the execution, we've created a whole new company so that we can focus on tight governance. These projects will be executed over multiple locations, including for the first time for us internationally. So we are also executing a project, the phase 1 in Oman, and that is to be able to support the business with an existing product where brownfield capacity expansion is, there's limited headroom there. Anyways, the other thing, so for us, it's a 4-year picture with project execution happening in parallel in many cases. Not to forget that we are also investing in a polycarbonate compounding facility where we have already started to supply to customers. We've already received quality approvals from marquee customers which have Indian presences, as well as about 120, 150 crores into a world scale, world standard research and development center. This will house R&D as well as process scale up, as well as environment lab and safety lab.
Okay. And what would be the contribution of all of these investments and projects to the top line?
It would be significant. We normally have a threshold that we have. When it comes to specialty chemicals, we have a threshold of between 27 to 30% ROCE. And when it comes to intermediate chemicals, the positions that we have are more from the turnover to asset ratio. Now, where we are looking at going both upstream as well as downstream, for example, we have to keep that in mind. But on a long-term basis, we're expecting a 2 to 3% blended margin improvement over the current EBITDA profile, that too on a significantly larger base.
Okay. All right. So it seems like perhaps we're at the end of that painful cycle for the chemicals business. Thank you so much, Mr. Mehta, for speaking with us.
Tamanna, I'll just make a point here. As far as CEO's job is concerned, see, it is my job, along with my team, to chart the destination.
Right.
Now, when you're on a ship and you're charting towards a destination, in the middle is, every chance that a storm comes. When the storm comes, my goal is to make sure that the ship survives and remains resilient through the storm. And I continue on the journey towards my target destination. But in the middle of the storm, if I am focused only on achieving my destination, then it's a wrong target. Here, I have to focus on weathering the storm and doing it with a sense of resilience and motivation, because I believe in the end destination. And I know that this ship is going to take me there. So I focus on prioritizing the ship.
Okay, so I think that caveat was an important one, and thank you for that, because instead of just only painting a rosy picture, you are addressing the concerns that may continue at least for some time. But there you have it.
I remain bullish about our ability to get there.
I've not heard a CEO who wouldn't, and that would be unusual. But nevertheless, great speaking with you, Mr. Mehta. So there you have it, Deepak Nitrite. Not the greatest Q3, but definitely an optimistic outlook.
The Nifty ends at a record high led by Axis Bank and HDFC Bank. Sensex gains close to 0.5%. Broader markets underperform the benchmarks. Federal Bank stock dips as Kotak Mahindra Bank retains and promotes KVS Manian. Blockbuster debut for Vibhor Steel as it surged 195% above the issue price, making it the best listing of the year so far. The Maharashtra Assembly unanimously passes the Maratha Reservation Bill. Legislation will grant 10% reservation to the Maratha community in both education as well as government jobs. Welcome. You're watching The Reporter on NDTV Profit. I'm your host, Pallavi Nahata, and as always, the show aims to bring to you top choice when it comes to market headlines, along with national and international news. Before we delve deep, let's take a very quick look at how the markets have fared during the day. The Nifty hit a fresh high of 22,215, with Nifty Media being the top sectoral gainer. My colleague Hersh Sayta joins in with a quick wrap of all the D-Street action.
Well, it's the second consecutive day where the Nifty has recorded, or rather, in fact, now closed at record highs. We've settled just below the 22,200 mark, 1/3% higher on the Nifty 50, largely driven by banks. But let's quickly look at the heat map first. 1.2% higher on the Nifty Bank, but let's look at the heat map first. You'll see a couple of gainers, but when you see the top 5, you'll see 3 of them being the large private sector banks which have led the day today. And what a fabulous way in which they've led. 2% plus on Kotak, Axis and HDFC, supported by 2% on Power Grid and 4.5% on Power Grid and 2% on NTPC. It's a fantastic coat of green there at the top. Among the laggards, 4% lower on Hero Moto. Coal India, on the back of some commentary, has seen a second consecutive day of declines. But outside of that, you've seen the IT and the Auto Pack leading the declines, except for that Bajaj Finserv there, and then you have a supply as well. But let's quickly take it to the Nifty Bank, because that's the sector of the day definitely, because the way in which they've led some of those gains. Look at that. 2% higher across the board for Kotak, Axis, HDFC. Then you had IndusInd, Bob, PNB, ICICI, which has led for some time. Bob, PNB, ICICI have really led markets for some time and taking a bit of a backseat today. Let's quickly also look at sectors, because you will see some other sectors also emerge as winners today. The Nifty Media has done fairly well. The Fin Nifty has done well on the day of, in fact, closing. You're also seeing gains on the Nifty Realty, 1.2% higher. And you're seeing a mixed bag even in terms of the losers. IT, Auto, Metal, Pharma. 4 big losers along with FMCG among the sectoral indices, and despite that we've clocked highs. Where have we lost out? In the mid and the small cap space. Broader markets, you're looking at the mid cap index closing just about 1/10% lower, absolutely flat, negative bias. The small cap index closing around 0.4% lower. But it's a day where it's been led by the benchmarks. We'll of course have a very, very interesting week in front of us.
Now,